Andy, what's going on today?
Yeah, thanks, Scott. Got my partner back this week. Hello, Andy.
Yes. Hey, Steve. Good to be back. Hi, Scott. Hi, everybody. Welcome
Yep,
aboard. Yeah.
that seems like it's probably been forever for you on this
Yeah.
one.
Yeah.
All right, so let's get started while the regulars trickle in. We'll go through the regular slide deck here. Just a reminder of the disclaimer. Andy and myself have been doing this for a while, and we're employees of Trade Ideas, and we're going to talk about trade ideas and a couple of opinions we might have about certain stocks and companies, but none of that really is intended to be financial advice. So if you need that, you got to go seek out the professionals. So we're coming off a very successful test drive. Broke records in terms of how many people came through and tried out the product for 2 weeks. A lot of them are sticking around and taking it to the next level. And we want to help you do that, recognizing there's a lot to learn, and we want to try and lessen your learning curve. The best way to do that is through the live trading room every day. If you're not in there with Barry, it's kind of like a paid live trading room, but there's no payment. It's free. And there's a lot of good information in there, as well as a give and take. If you've got a question you need visibly demonstrated, Barry is very generous with his time and will do so and help you out. Additionally, I did it today, and he will do it on Fridays, but we give Barry a break, the noon Eastern hour, and we fill in and kind of take over the YouTube live stream for an hour, talk about whatever it is you guys usually want to talk about, what we see going on, and of course, the continued support. So we're making ourselves available every 24 hours in that live support session. It's 100% for people to show up and get the questions they need answered visually, because it just doesn't work out when we get requests to try and do it over the phone. It just can't really be done that way. So, and then we have the afternoon webinars, which usually we've got a little something we want to talk about. But as you heard Scott say, towards the end of my webinars, we always go over a few charts or so we can look at a dozen charts as we get towards the end. I'll make an announcement. If you guys have any symbols you want us to look at, we can certainly do that to walk us out. And though that brings us to, just a reminder there, the daily support session, that bottom URL with the /live will get you to the live stream directly on YouTube. That'll forward right to the YouTube channel. All right, the usual theme, years on end for this webinar is man and machine combined really is the best relationship. We can't rely on ourselves as humans. There's just too much value that the machines add, but the machines can't take that value and figure out what to do with it in real time like we can. So it's a good symbiotic relationship to work together with our machines, whether it's in the health industry or financial or energy or what have you. Technology is curating the good ideas for us, and it's up to us to really take it from there and maximize it. And I think Andy might even obviously have some pretty good real world examples of that coming up on his segment. So we'll talk about the market recap. As mentioned, the AI recap, Andy has some thoughts on that. Finally, the trade of the week, Box gave us a pretty early trigger as opposed to last week, which never triggered, which was really surprising to me. I know I was very, very confident and bullish on a lot of those setups, and they just kind of dwindled away. But that gives us another week to go back and try again, and we've got something to talk about this week. We'll get to that. I was thinking about the current market dynamics and kind of how trading has changed recently, very recently in the last couple of months, and what's working and what isn't. So I tried something, and it seemed like a pretty good visible exercise to go through and share with you guys over the weekend that I came up with to kind of just show how you can use trade ideas to maybe bolster a theory that you have and let the data show you that. So we'll get to that. And then, as I said, we'll always walk ourselves out by looking at a couple sector ETFs to keep an eye on for tomorrow, and any individual stock requests you guys have. We'll take like 10 or 12 when we get to that point. All right, so let's get started here. Oops. All right, we'll come back to that, and we will go to S&P 500, is where I usually like to start. Nothing's really changed in the big picture. As continually mentioned, the 50-day moving average continues to be just the backbone of this rally. If you have the will to jump in and grab your laundry list and buy things when they touch this 50-day moving average, that has worked well for you. It's not to say it's going to continue to work in the future, but that is what we have to lean on for the most part. And then, as you see, market kind of, get my drawer back, the market kind of has its bounces to it, like a ball bouncing uphill. And last week's candles, as we zoom in here, was just a whole lot of nothing, especially when we get to the NASDAQ and the Qs, we will see that whole lot of nothing. And so goofy opening today, if I bring that up, opened up and never really looked back. It is so hard to get any kind of follow through in one direction, especially if you have a direction in the gap. Chances are it's just not going to go where you want it to go. So a lot of back and forth, and that's probably a good segue into what we are going to talk about a little later, looking at trade ideas, back testing, and kind of something I found here. But nothing more than to say this market has no real catalyst that's focusing on. It's just kind of drifting higher. And when you have just these sideways days in which, look at these, 1, 2, 3, 4 out of 5 days here, we're red candles, yet the market continues to go higher. That gives us the indication of a lot of gaps and fails. But yet, if you draw a straight line, it still is going up. So that in itself also makes it very hard. So we got a little bit out of whack today, just too much of a gap up for whatever euphoric reason the market was focused on. It had nowhere to go, but just a quick sell-off and then just kind of loiter down here at that 5-day moving average we see in blue. No real major damage done to the bigger picture. Again, maybe it's just the beginning of, like I said, that bouncing ball bouncing up the hill, so to speak, doing it with red candles, making it hard. Ideally, we'd like to open low and close the day high instead of having to roll the dice overnight and see what we get and then try and make a guess out of that as well. So coming off last week, just a slow grind higher. We're in clean air here above all the key moving averages. Let's look at the technology side of things in the NASDAQ and the Qs. As I said, even more of a sideways grind coming out of last week, and then a bit of a gap up, poke the head just above Friday's high, and then a collapse all the way down to the low end of this range. Nothing really simple about that unless you were sitting there laying in wait for it, which I highly doubt you were. I wasn't. So very tricky backdrop indeed. And two, also the 5-day moving average kind of playing a little bit of a spoiler there at the end of the day in the NASDAQ, holding the price down. But on the bigger picture, NASDAQ is above all key moving averages, and anytime we can get movement down and then bottoming tails in the individual candles, that can start to warm up to the bulls a little bit as well. So maybe this is just what we're going to call a just simple sideways reaction until the market finds a catalyst. And then you would have to assume that if the market does find a catalyst, it's probably going to be up, because that's where this kind of cup and handle is showing. The moving averages are down here in a supportive roll. As I say many times, there's no bear case to be made. Where was the fun today? The fun was over in the IWM. The IWM took its gap and did a horseshoe with it. Filled about 70% of the gap, picked up that 10-period moving average, and just kind of bounced its way higher in a very nice trend. So there's always a rotation somewhere, and that's when the market gets really tricky, when it's not super obvious. It's like, what is the next day and a half rotation going to bring? Is it going to go to biotechs? Is it going to go to energy? You just don't know. But today, I think if you were playing some small cap stocks, you definitely had the wind at your back. So again, no bear case to be made. The IWM did fight its way through that nastiness eventually, and it too is now up here in clean air. So we've got all three of the indexes. We could say 4 if we bring in the Dow. All 4 of them are just kind of grinding away on red candles, moving higher above all their moving averages. And I can just tell you, it's not exactly the easiest backdrop to trade, but it is what we have, and we'll try and make sense of it. Anything you want to add?
Yes, there is. I mean, go back to the SPYs. And Steve, I think I counted probably a dozen candles. Let's see, 1, 2, 3, 4, probably about at least the last 10 candles have all been gap ups. I just was looking through that. Yeah, it goes back to, it's not even a theory. People have over the last 12 years have looked into it. If you bought this, if you bought the SPYs, even. Oh, I'm sorry. You got one
counting
of them.
this one right here.
Yeah, You
That's
got
a
one
gap
that was
up
a gap
there.
down. Yep.
Yeah.
That's true. But gosh, going back anyway, what I was talking about is if you bought the SPYs at the close and sold them at the open over the last, say 12 years, you would be a very wealthy man right now. And I think it accounts, Steve. I think I remember it accounting for like, oh gosh, 45 or 50, maybe even higher percent of the S&P gain over the last 12 years has been in overnight gaps. So,
And you're not even
incredible.
talking about that one little special hour or two window that happens like when Europe opened, and
Oh
it's
yeah.
like that was the time of night when we're all sleeping
Oh
that
yeah.
the
It was like
S&Ps were
4-hour
making
window.
the move.
Yeah.
Mm.
Yep. But anyway, yeah, that's it is difficult when you have the rotation, but we are grinding higher, even if it is on red
Low
candles.
volume.
Yeah, low volume. We've seen that pattern for a long time now. But you know, what are you gonna do? It's the market we have. Yeah.
Well, I got an idea of maybe try to make a little semblance of it when we're done with your segment when we come back. But if not, go ahead and take it over.
Well, swing trading helps, but let me take it over here, and we will take a look at the Holly with a couple of really good calls today. But you know what I'm going to focus on today, guys? And I think this is probably the most important. I've talked about it in the past, but you know, this is going to be a very important AI segment. So whether you're trading AI or any strategy or style that you have, okay, and I can tell you from, and Steve can vouch from our long tenure at trading, the ones that really make money, especially day traders. Swing traders is kind of a different breed because you learn to be patient and hold things for several days or several weeks. But most day traders, their biggest problem is taking their profits too soon. All the best day traders I know, okay, they're not looking to jump in and out of something, and you've heard me say this, I know, over and over, but you know, 10 minutes or 15 minutes, they're looking to hold something for 4 to 5 hours and maybe get out at the close. That's where you learn to make, you know, the big bucks. And Holly has shown us this over and over in our back office. Guys, this moderate profit, let me get another color. I don't know how to get stuck with black. This moderate profit, okay, has outperformed conservative profit handily. What does that mean? Well, conservative profit is going to get out for any reason that Holly gets out. Let me expand this so you can see the exit reasons. Okay, these two both hit their target. Okay, one would be inclined to get out, you know, when they see that target hit, but they would have left a lot of money on the table had they done that today. And I've seen this many times. Holly will get out for timed exit. Okay, Holly will get out for profit save and stop hit. Now, stop hit is a good one and to get out on, and moderate profit does. You can see them freeze in moderate profit once they hit the stop. You can see this OEG right here. Okay, the stop was hit. Now, if you were in aggressive profit and ignored the stop, you would have done very well. This was actually a very good call. It just went sideways and the stop was too tight. I don't know, you know, why the stop was so tight on this one, but anyway, you know, you'd have done very well. A lot of people would have looked at this as a trade around. I'm not one to really preach a whole lot on that because I know how hard it is to focus on everything you're looking at to worry about trade arounds. But I know Barry does it and some of the guys in the room does it. But what I do want to focus on, guys, is the holding on to your trades. Okay, and look at these two right here, this L, these two right here, and look at the moderate profit versus the conservative profit, substantially higher. And that's what I'm talking about. You're going to have to learn, you know, if you're going to day trade, to hold on to these stocks for a long time versus a few minutes. And
we fear. You could even touch on that fear that we're all unfortunately wired.
Yep, we are.
We're
wired to fear when a stock is going in our favor, and we're wired to hope when it's going against us. That's just the way human behavior is. And Jesse Livermore, you know, talks about in his writings that you have to learn to basically retrain the mind to think just the opposite. In other words, you hope when they're going in your favor, they're going to continue going in your favor. And then you fear when they go against you that they're going to continue going against you and you get out. And it's hard to do, but boy, I mean, look at this LX. I mean, great call right here at 1010. There's so many good things about this. Now, it wasn't a downtrend, but it kind of broke through a nice little pivot level right here when you got the buy call. But anyway, look at the volume there, 14 relative volume, almost 15 relative volume. You can see this was earnings. It was an earnings play. There was just so much to say good about this. Boy, if you held on, if you bought this and held on, you know, for the day, you done very well. This one is a little bit different animal, this VNTR. Okay, this was, and this, Steve, I don't know about you, but separation from the 8 short. I think this is a relatively new one. I haven't seen this a whole lot. And
let me just say, because I talked about this one in the midday session, and I know some people are in here that might have been in the midday session, and I said, this is an interesting one because it's a short that was a big fade, and the short was above my momentum line. I said, if you're in this trade and you're trying to be patient, you're cheering for those candles to start closing under that 10 SMA, and once they do, that's when you're going to want to hold on to get into Andy's thesis here. Yeah.
There you go. Yep, and exactly what happened right here. Once it closed below this, you were still in the money. You've never really closed except right at the entry, but then that's another tight one. Guys, when you see these stocks that are big gaps and they're real tight, maybe you want to go a little bit smaller size and make your stop a little bit wider than what you're seeing in some of these calls. But yeah, Steve makes a good point. You know, there was weakness, and then once it got down here, it really never even got close to the entry. And once it broke, like Steve was saying, that fast line, you can just see the momentum just continued to go down. But once again, holding the trade all day paid you almost 3 times as much in both cases here. Okay. Let's see, this one actually I thought was a beautiful one too. A beautiful call there right at the buy. I mean, you had the gap up here, kind of slopped around, went sideways, and then you got the signal right at this kind of an intraday high, nowhere near the daily high, but a beautiful call there. And then nice, very nice trade right there. Good day for Holly at a market that I thought was tough. You know, not a whole lot of trades. But guys, once again, we've seen this in our back office, and it kind of you know, holds water to prove, you know, what I've seen from good traders my whole life. Okay, the ones they will not only will they hold these things like all day, but they will buy more as they're going in their favor. So very strong, you know, attitude to try to have, but trust me, it can make a difference. Okay, because I know what it's like.
One thing I would add on that one is it closed on highs on double relative volume. Those are the ones that you can maybe think about selling half and then seeing what happens on the open.
Absolutely.
Because some of these things can give you a little bit more squeeze on the following day, at least in the first hour when they close strong on good volume at the top of their green candle.
Absolutely. All right, Steve. Well, that's all I got, unless you have anything to add.
No, that was really all I wanted to add. I jumped in where I needed to.
Okay.
So I will wait. Great. All right. So let's go to the trade of the week. And this is one that's we've been watching this one for a little while around the Trade Ideas stall, talking about it at the water cooler, but it never really kind of gave us the right timing. And one of the things I really liked, I'm gonna see if I can get it. There it is. One of the things I really liked about this setup, aside from the fact that we've been watching it, was that it did what I talk a lot about. Let's see if we can get yesterday in there. I'm talking about right here on the open. It got real volatile on Friday. Sorry, and jammed down. It gave us a jam down. In this case, it was a jam down there to the 50 and the 20. They were converging right there. And Andy and I have been watching price action now since algorithms took over for a long time. And we've noticed one thing, that in the morning, they just like to find a way to get down to certain levels that they can achieve reverse course, you know, algorithm. And a lot of times that seems to be moving averages. And in this case, that was a mental note going into this setup into the weekend. And you know, another way I like to look at this, and I even talked about it one webinar, is, you know, a guy let's draw it, a guy holding a bow and arrow, and you got to pull that bow and arrow back sometimes to get it to fire. in the right direction. And that's kind of the way I see those algo jam downs a lot of times. You get that nice bottoming tail by the end of the day. It tells you, hey, no harm, no foul. That might have been the washout of the weak hands that we need in order for the contra move before the real move comes. And wouldn't you know it, it gave us a nice move and triggered rather early. You can see the trigger was going back here just to clear out and make sure that these past few consolidation days were taken out. But more importantly, it gave us a good close above the trigger with good volume. Matter of fact, the volume was really good. Yeah, almost two relative volume all the way into the end of the day. So this thing showed us everything that we kind of hoped it would give us. But I just really wanted to kind of highlight on that look that it gave us going into the weekend. When things are sideways, I equate it to like, you know, you're a roofer and you're standing on that ladder and you put your foot down to find that last top rung, and there you feel it, and there's your solid base, and then you can push higher. It just seems like the algos love to do that, and they love to do it early in the day, not late in the day. So that trade is alive and well. Somebody asked me a great question today. Well, where would you start thinking about selling some? Well, you know, I said that there's no reason the stock can't get up and test 30, but along the way, you might see something like these two areas back there. If I mark up that horizontal line, this was 2 days in a row that, you know, 24.75 was a pretty good line in the sand for the sellers. So maybe this is a place you would consider taking off a third or, you know, maybe even a half, but this is the kind of target you want to start taking profits at. And, you know, I'm going to get into it again here in a minute. I don't trust things longer than 2 or 3 days lately. Matter of fact, 3 days was a pretty good movement. When we back tested, you know, in the summer and in the fall, things were having some really nice, you know, 2, 3, 4 day swing trade moves. Those are gone, and we're gonna back test for things that are just more like a day and a half or like even less than that, and see how those start to work. But if you're in the trade, be very aware of this level, and this level could come very quick tomorrow. It'd be nice if it would, but if it comes quick on the open, maybe consider taking some off, because that's where the sell was in the past. As far as the risk management goes, and I believe we just spoke about using this prior level to lean on. Matter of fact, it probably should be the 20 period moving average. It says the 50, but I would probably use this red 20 period, because this 20 period is going to start to come up pretty quick. The 50 is going to wallow down here a little bit. But since we've got that as our solid base camp, that's a good place to look for risk management. Let's see, what else about this trade? Anything you want to add about it?
No, I like it. I bought some on Friday, and I added to my position today, and so more than likely it's going to fail. No, no,
Well,
no. It's a day after. It's a reaction after earnings too. That I always love seeing.
right. Yes.
Yeah,
Yeah,
it's
that was
the
coming
day
off
after.
earnings. Yeah.
Mhm.
Another little quick, you know, note. I'm not in profit taking mode, but if I was in profit taking mode, that would be the candle intraday right there that basically tells me from here on out, it's going to get a little washy. And you're probably going to be better off just taking your profits off that signal candle. You can see it tried to go and then it came back down. And in the long run, it pretty much just closed, you know, right there. So another good example of why I like to use my intraday gauge of momentum of a closing candle off of the 10 SMA there. But not enough meat on that bone to start talking about profits yet. Hopefully we can get up there and start talking about this kind of thing tomorrow, maybe around the 20, whatever that level was, 20, 24.75, to take a good chunk off and start to feel better about, and by the way, when you take a chunk off like that, it helps alleviate exactly what Andy and I were talking about, that wired predisposition we have to fear the stock's going to pull back on us and we're going to lose our profits. When you start taking pieces off incrementally like that, you're combating that that emotional wired feeling that we have, that we're fearing that it's not going to go higher when we should be hoping.
Mm-hmm. And also, guys, we don't talk a whole lot about exits, because exits are relative. They're basically, you know, some people may be a tight swing trader like Steve and I are, you know, maybe hold 3 to 5 days. Some people may want to look to hold 3 to 5 weeks, so and have smaller size. So it's all relative to the size you play and the time frame you like to play in.
I'd like to help Chris's question, but I'm not quite sure I fully got it. I noticed a new item on the company description window. I assume is this one here. Under similar, I see a switch competitors and price action. What's going on there?
Far
Company
right.
name.
Far right.
Oh, Switch. Interesting. Hey, that's new to me too.
Me too.
Oh, boy, you're good, Chris.
Yeah, learn something.
We're over here running our
What's
development versions, and I didn't even really see that. I think in the past,
is it
there's
just
kind of, I don't know.
it looks like to me it's just using change from the no, not the close. Okay. Position in your range, maybe. I'm not sure what it's doing there.
That might be a great thing to write in on the email.
Yeah, no,
And
yeah, for
also,
sure.
Andy might jot that
I'll talk
down and
about it, sure. My
get a little
webinar.
bit more familiar with it on his Thursday webinar. But thank you for pointing that out, Chris. I did not catch that. Very interesting. I use this similar for the competitors for the most part. Who's competitors to AMC? CNK. You were talking about that one the other day.
Yeah.
Okay, so box trade of the week. It's working. Love to be able to take some off tomorrow because I feel like you're living on borrowed time to try and get 3 solid green candles. So if we get some good early morning first hour action tomorrow, I'll probably take some off too. All right. Well, that brings us over to, and you'll notice this is a developer's version. So this container window is not quite available to you yet. Oops, but this is a container window I'm working off of. And basically all I did was I paired up my 2 jam down series, the one that jams down and the ones that jam up on the open. And for those of you who've been with me for a while, we went through a lot of jam down scans back in the day as the market was doing this, jamming people down and then moving higher. Well, for the last couple months, it hasn't been quite as easy, and this jam down doesn't work as well as it used to. And that begged the concept for me to build the opposite, which would have been the jam up and sell to see if those were working. Well, when I originally built it, we were back testing it, and it was telling us, don't do that. It's not a good idea. Maybe someday, Steve, but it's not a good idea. So with that foundation and another layer here of foundation, as I said, when we were back testing the jam down and buy, we were back testing for like 2 and 3 day holds, 4 day holds, and they were coming out really nicely. Whereas like if you held for the day or sold at the bell, you just weren't getting that nice push that, Andy again was talking about, trying to let the winners run. The data was showing that to us. Well, the data has taken a marked turn, as you've heard us, grumble and talk a lot about how things have changed out there. The backdrop is not what it used to be. Things just don't run in the direction they want. If you're trying to buy breakouts, you might as well just forget that. Because what we're going to look at here, these were both contrarian. If you recall, the jam down and buy was looking for items that got jammed down on the open and then was a buy as a contrarian signal. So I think I'm frozen here. There we go. The first thing I want to do is I want to go back and jam down buy. This is the one that used to work really well. I'm going to back test it, and I've already done a little bit of work. We're going to go till like noon Eastern. Here's the big change. We used to back test this jam down and say sell in 2 days at the open. Let this thing marinate for 2 days. Well, I know that's not working, so I'm not even going to go there and test it. We're just going to test, can we get that follow through that I talked about tomorrow on the open? And maybe if we're lucky enough to get a nice open, a nice gap, maybe we can squeeze a little bit more out of those types of trades. So we're going to back test the jam down and buy. These would be things that jam down to the 10 SMA on the open, and then we hold all the way through today and then sell on tomorrow's open. Let's see how that works. Pretty sure I did the right one. It'll give us a baseline for that. And then we'll do the same baseline with the jam up and short sale, because some of you may have recalled that, even Andy, and I've watched him do it, he's made some darn good trades in individual names on the short side. Any of the shorting I've tried to do has been stupidly in some of these inverse ETFs, which work for a day or so and then they fall apart. But there are names out there that are under the surface that are just falling apart, and that's why we're scratching our head some days as to what is driving this market higher. Okay, so we did our 1.5 day scan for the old jam down that used to work really well. Oh, one more thing, by the way, I only ran it for 25 days. You see, if we run it again, we ran it for 25 days, 5 weeks, 5 times 5, 5 weeks. I figured that would be a good sample to try and see some of the mess we've been dealing with. Okay, let's park that over here. Let's go up to the jam up and sell, and let's mirror this strategy. Back test, everything being the same. Start at the open, go to 9. Timed exit is tomorrow at the open. Risk management's the same, try to make 10% risk and 3%. Advanced, same period of days to sample 25. This is a short. What happens if we sell this? Yes, Ben, I'm going to give these out. Don't worry. I never show anything in my webinars that I don't share with you guys. All right. So right off the bat, we have what I feel like is a little bit of indication to show you that the jam down and buy, whether even it's for a day and a half, the statistics are not there. We got a 97 trades, horrible win percentage, a lot of red. Okay, so let's just go ahead and we'll just kind of put that down there and park that. Now we have something that works a little better. Now, Andy, I know there's one day in here or maybe 2 days where we had a lot of really good action. And I don't necessarily like that, but what I will argue is on the flip side, we didn't get that really over here. It's just been kind of a steady decline. So what I'm trying to do is really compare what's working better, a contrary buy for a day and a half or a contrary sell, meaning you're not chasing, you're buying the opposite. When they're selling, you're buying. So we got this little interesting stat to start with here, and we haven't even done any optimization on it. So I'm going to optimize it, and then I'll share it with you guys. First thing we're going to do is we're going to look at the time of day. I'm sorry, we're going to look at the price. And I can see right off the bat, 400 trades are in a win percentage of 42%. There's a lot of red here on these stocks under $25. They got to go. So I'm going to right click, and I'm going to set my minimum value price to 25. Going forward, we're now scanning from $25 and up. So we'll click OK on that. That's a bit of an optimizational move right there. The time of day is exactly as I thought. The first 20 minutes of the day is a lot of noise, but if we ran this thing and started at 20 minutes after the open, we can probably do a little better. So just those two things, I'm going to run again directly from my scan. We're going to back test again. And I said we needed to start 20 minutes after the open. So now we can compare apples and apples. We know that this one is working better than that scan. Just forget the jam down and buy. That's not working. But these morning trades that are popping up, they're not great charts, but they're popping up into their declining 10-period simple moving average. And if you're able to see those as a short sell and jump in, looks like they're working. Now, the two changes we just made, just to reiterate for the new guys, we changed our scan to start 20 minutes after the open. We're going to disregard everything 20 minutes after the bell. Then we'll start scanning, and we got rid of the 25 and under. And let's go ahead and simulate sell, and we can compare apples and apples. And it pretty much just kind of points us in the right direction that this is probably where you need to be focused. So if you're focused on buying the dips on the open and trying to hold them for a couple days, it's not working. But what is working are things that are pushing up through highs, suckering people in to go long, and then collapsing for a day, closing on lows, and then you're probably getting a nice gap down on the following day. And all of a sudden, doing a lot better there in terms of the dark green colors and our win percentages and our average winners and average losers. So again, the point of that was to just essentially illustrate the tale of two different strategies. What's working might not be what the indexes are showing. And that's an interesting little look right there to show you that. So I just modified this. This is the jam. You want to add anything, Andy?
Oh, I just say that's interesting. It kind of makes you concerned about the scaffolding of this market. You know, what's underneath.
It is.
Yeah,
it is. It's another little concerning nail that I see that you can't really point to. We can sit here and talk about, you know, the spies and the Qs being in clean air all day long. Yeah, they're going higher on red candles, but you know, if you're adept at shorting and you're finding the right things, there's follow through to the downside out there in individual names. That's what I think this little exercise using our back tester with two mirrored approaches just demonstrated.
Mm-hmm.
All right, so as promised, I'll send them both out. I'm going to send out the optimized jam up and sell. Let's put that in my chat. And then I'll put the other one, which was the one that I've always used, the jam down and buy, which you really don't want to use right now. It's not working. You're welcome to have it and save it for your cloud. And the other thing, again, these were working well for 3-day holds. I could go back and try and scan these for 3 days. let's just do that for fun. Let's go back and let's see what happens if we try and back test this for 3 days. Maybe it's better, maybe it's not. I don't know. Exit. Tomorrow, day after tomorrow, we'll do one more day. Tomorrow plus 2 days. Let's see if that gets any better. I'm going to predict that the noise of the market just kind of throws the price action back into nothing. As a horrible
It
scam.
does, yeah.
Didn't work. So our lessons are the shorts seem to be working a little better.
Take your profits quick, man. Yeah.
And take your profits quick. If you can
Yeah.
bleed it, if you are able to get something that's short that closes on lows, take that gap down on the following day, because what you're probably going to see is something like this day right here. Market gaps down and then just trades right back up. So anyway, I don't have all the answers, guys, but I wanted to demonstrate how we can try and use Trade Ideas platform to at least hone in on what to avoid the jam down buy at this point, and maybe what we could expect to work and what the time frame on that might be as well. All right, so those 2 items should be in the chat window. I didn't add, there we go. Let's make sure that's that one. There, great. There we go, thanks Dave. Yeah, I just popped the code in there for the other one. So Ben, Dave, KJ, whoever is looking for it, it's in the chat window there. All right, so we'll go ahead and look at some single name stocks that you guys want to in a second. While you're collecting those names and typing them in, I always like to maybe just see if we can find a sector or two to keep our eye on going into tomorrow. Let's just go down the list here real quick. Right off the bat, oil service is one of them. And I'm saying that because, you know, we had pretty decent little wedge there and a gap that gapped up and out and closed at or near highs. Keep an eye on the oil
About a
service names. What's
3
that?
month, 3 month cup and handle as well. If you can.
Yeah. Keep
that,
an
yeah.
eye on that sector tomorrow. That's probably going to be the best looking one we have, even though it was the strongest one today. To me, the way it busted out of that that wedge and that resolution has some real intent. And I don't know what happened to China stocks, but both the FXI and KWeb here. Do you have any idea what's
Probably
going
just
on?
probably just value. They've been beaten up pretty hard. Yeah, so
I think they had some economic data last night too. Not that you can believe
Yeah, I
any
think
of it.
you're right. Yeah, yeah.
But okay,
But
so
they
we'll
have
call
been
that a
beaten
pro
up.
gap. Yeah, a big downtrend and a pro gap coming out of a downtrend. You really can't sneeze at that. So if you've got any China stocks, ADRs, or anything that you like to watch, they might have a little spillover tomorrow. And I did go through most of these already. We're going to add energy just like I'd added oil. So oil, China, and energy all seem to have a pretty darn good day with some good gaps and good, strong, solid closes. Because as I go through the remainder of these, well, I guess you could add steel in there as well. There's the China, another gap up, and there's another oil one, and then we're going to start to just drop into the ranges here. There's nothing going on there. You know, there's a possibility, but you can see a lot of selling in that retail ETF having a hard time. I'll say it again, I have no idea why the commercial retail REITs continue to go higher as businesses close, but they are. Self-driving cars, extended, IWM, we talked about that. Airlines, they're creeping above their moving averages, but they're not really doing it with any intent. Again, the financials have been making a lot of noise, but they haven't really gone anywhere, the banks. We've got agriculture, interesting. Agriculture, kind of interesting, nothing to sneeze at there. Broker dealers continue to move higher, and then financials grinding higher. I still love the GDXs. I know I was pounding the table literally last week, but they're still sideways. Don't lose track of them. And then I think from here on out, there's not really much. Home builders are just caught in the range down there. That's a mess. Silver, great open, gave it all back. And Treasury is a mess. Gold, the commodity, you've looked at that. That's a mess. Solars, you might be able to make a case for. They're trying to do something. Keep an eye. I know you've liked SPWR, haven't you? You still kind of keen on that one?
Yeah, I sold half of it the other day on that move up when it barely moved up on Friday because I just could tell it wasn't going to go. But I'm still in some of that. I missed quite a few of the EV stocks too still.
Yeah. All right, so I guess that's about it really for, healthcare had a big dive today. So guys, if you have any individual names you want to look at, we'll do that before we bring Scott in with any announcements. And yeah, real estate is strong, but Jim, I just can't for the life of me figure out how they've held up so well the last 15 months with empty office buildings. But oh well. All right, here comes some symbols. We'll take a look here, and then we'll let Scott know when it's time to come in. MDLZ is the first one. Very nice trend, sideways action. Look at that. It put its foot down and stepped on the 10-period simple moving average today. Did it at the close, however. Not exactly what I want to see, but nonetheless, it has a shot to continue to try and move out of that level. Oh yeah, Ford. Somebody was pounding the table on Ford last week. They're looking pretty darn good. But as an entry up here, you're probably better to wait and see what these moving averages can catch up. You probably get 14 before you can get 15 again. And that's what I'm thinking. ICE. What is this? Oh, this is the Intercontinental, right? Is that what this is?
Yeah, it's the exchange.
S window. There we go. Boy, they had some not so good news today, I would guess. I don't know what that is, but if they didn't, that was a pretty ugly technical candle they put in there. You're going to see what happens at the 200-day. You might get some follow through tomorrow on that. I'm not too familiar with that one, but yeah, a lot of damage was done. That's about as outside of a day as you could get there. Oh, Dave, I'm still in TGB. I'm still in it. I'm still loving it. I'm still thinking. Matter of fact, that reminds me, real quick. I did try and put some additional names in the trade of the week, and FCX is one of them. Let's just look real quick and see how these are doing before I come back to that. AG is a silver name, gapped up higher, held a lot of it. STLD was we saw steel, also looking much like the steel index, looking good. FCX, so this is why I brought up FCX, because TGB and FCX are both copper mines. I don't know, there's just too much discussion of supply chain interruption with building materials, inflation. I'm bullish on copper, so therefore I'm not going to get out of TGB. BLMN was also on that email, didn't do anything today. You might want to put an alert right there just to see if that does anything. Car Gurus, what did they do? Did they do anything? Nope, sideways, but any day now this thing could try and bust out of that range. Keep an eye on that one. And then Newmont looks very similar to the GDX, as I mentioned earlier. So TGB I like, I'm still in it. I'm not getting out, David. So yes, you're correct. That was a prior trade of the week. It looks like I just locked up. There we go. And I'm gonna just really key off of this 20-period moving average. It held, was not easy, but it held real strong. So that's my new floor. That's my new floor of support there in TGB, David. All right. Oh, did we hit the end? Anything else? Okay. Slava wants defend. Drexion. Okay, so this is the aerospace ETF. That's why you got a lot of gaps in there. Very strong aerospace ETF. I don't know if that's a good or bad thing. Military industrial complex is having fun with their toys. But it's above its moving averages. It could play catch up at any given time, but it looks strong for sure. All right, one more, then we'll bring in Scott. We'll finish with PDD here for Randy. And what is this? Looks like it's trying to break a downtrend, doing a good job of it. It's working through everything it needed to work through. It's got its first close above all key moving averages here for the first time in months. So I think it could build on that. This moving average will come up and start to support, sideways action. Yeah, it's definitely fighting its way through the headwinds that it had for it. So a couple good volume days as well. Yeah, nothing to sneeze at there. All right, one more, then we'll do Scott for Asia. HCDI. Long protracted base down here, a little bit of volume, something coming to life today. Could be some follow through tomorrow. I'm not familiar with that one, but didn't do bad on the volume, doesn't look bad. If you're in it, I would expect some follow through tomorrow. That's probably the best I can say for that one. All right. Oh, time crept up on us. Good to know. Thank you, everybody, for your questions and comments. That'll do it for this week. If you have anything else, info@trade-ideas.com is our 24-hour support ticket. We'll get back to you pretty quickly. We have the means to. So let's bring in Scott for any announcements, and thank you very much.
Yeah, thank you, Steve. Yeah, just a couple items.
There it goes.
A couple items on the way out. Grab the Favorite Strategy Indicators ebook. It's one of our new ones, and it's written by our Director of Software Development, Dave Maid, who also brought you the AIs and our back tester. We have a podcast. We've got some episodes out this year that are worth a listen, so go ahead and search for Trade Ideas Podcast wherever you listen to your pods. Add us as a subscription, then you'll be ready to pick up the next one as soon as it hits the presses. There's a new code for June. Sunshine saves you 15% off your first month or year of a new subscription or an upgrade. So if you're going to upgrade from standard to premium or get a new subscription today, go ahead and take advantage of those savings. Any questions at all, email us info@tradeideas.com. It goes to the help support staff in our help desk software so it doesn't get lost. Get you the answer you need as quickly as possible. You can find Steve on Twitter at TISteveG. Also find us at Trade Ideas, at QuantBot, and there's some other handles too. Facebook.com/TradeIdeasPro is the Facebook page to like and share with your friends. So thank you, everyone. The recording will be available later on tonight or tomorrow on YouTube, and you get an email reminder tomorrow about how to find it. Thanks, Andy and Steve. Thank you all. Have a good one.
All right. See you next time.
Thanks, everybody. I'll see you on Thursday.